creating new levels of comfort. It's just one of the lengths we go to make you feel at home.
He's making his investments talk. 40 years of thought leadership. Business Standard.
Hello and welcome. Let's take you through the headlines at this hour. Markets fall for the third consecutive session with the Sensex shedding over 500 points since Friday. Oil and gas stocks are a major drag. The budget session off to a rocky start. Opposition targets the government for favouring the ordnance route. The controversial land acquisition bill set to be introduced in the Lok Sabha.
They are looking at turnaround in 4 to 6 quarters and not in 1 or 2 quarters.
As the government dials back on the spend on subsidies, does that have a negative effect on the whole rural India story?
Stock prices align with earnings, and if they don't, then somewhere down the line that that correction will set in.
Market gurus believe the current macro environment is a dream for the FM, but warn that the markets will correct 5 to 10% if the FM presents a populist budget. A nationwide PSU bank strike has been averted. Banks and unions strike a deal for a 15% wage hike. Employees will get arrears from November 2012, but without interest. Day 2 of the budget session and the uproar over the ordnance route continues in Parliament. The government will bring in land acquisition bill in Lok Sabha in a short while. We'll get you all the updates through the day.
The first thing that we have objection is...
But for now, let's get to the big exclusive of the day, market expectations from budget this time with Saurabh Mukherjee, Hiren Ved and Nirmal Jain. Budget 2015 is around the corner and expectations are running high. The hope that the budget will outline a comprehensive plan for reforms and boosting economic growth has been fueling the stock markets. The litmus test now for the government would be to turn its vision into action.
So in fact, as we count down to this make or break budget, what are markets expecting from Finance Minister Jaitley? On the show today, we're joined by Hiren Ved, Director and CIO, Alchemy Capital, Saurabh Mukherjee, CEO, Institution Equities at Ambit Capital, and Nirmal Jain, Chairman at India Infoline. Gentlemen, thank you so much for taking the time out today. Saurabh, I want to start off with you first in terms of what we're actually working with as far as this budget is concerned. The market's been going pretty heavy into this entire budget itself. How critical is the kind of commentary that we're actually awaiting from the government here?
I think the first point to note is that I think expectations are very high. So leaving aside what the government can or can't deliver on 28th February, I think expectations are very high, and increasingly we are seeing that baked into, say, share prices of stocks such as L&T, some of the cement stocks, and Ultratech would be a good example there. The PSU banking stocks, the companies with serial problems on NPAs. And that high, the giddy expectations do worry me, regardless of delivery on 28th. Coming on to 28th, the main area where I think investors have a great deal of expectation is a series of capex announcements. I think the chief economic advisor has been talking about the need to pump prime the economy through capex. I think the government seems to be en route to a budget which will, say, step up spend on T&D, defense, low-cost housing, and I think that's probably the area where some of the stocks are rallying, perhaps a little too much, expecting a little too much too early in this election cycle.
All right, let's also get a view from Hiren. What do you think, Hiren? I mean, expectations have run high. Markets have completely, moved to new levels that we weren't even expecting so early in the year. Now, of course, a lot of hope that we'll actually hear some of the action that the government plans to put in place.
Yeah, I mean, markets and investors are always persistent. You didn't get it in the last budget, you'll get it in this budget, right? Well, yeah, I mean, I agree with Saurabh that, expectations are running very high. Some of those expectations have been fueled because of the fact that there was talk that Mr. Modi has told, the various bureaucracy that come up with some breakout ideas in terms of, getting the economy back on track, and so people are, trying to wait and see what those breakout ideas are really going to be. I think as far as the usual stuff that is concerned, I think the biggest debate that has started pre-budget is this whole debate about should we relax the fiscal deficit target for the next 2 years and use some of that space and the savings that we've got from oil subsidies to spend in the near term to get the economy cracking again. And I think that is going to be the central piece that people are going to look at. My own perception is that they will have some savings that and some rationalization of subsidies that they can redirect it. But frankly speaking, to me, what is most important is to keep to the fiscal consolidation path. I think after a long time, we got a monetary policy which is being run very sensibly. And I think that I hope that the fiscal policy also runs sensibly. I think the job of the government is to create an enabling environment, not necessarily to pump prim the economy. And I think investments will come on its own. But as I said, right now, the urge for growth is so high. The urge to kickstart the investment cycle is so high that we are willing to shove that aside for the time being, and willing to have a tolerance for a higher deficit. So I think that how they deal with this conundrum is going to be the most important aspect of this budget.
And some of the markets are looking for a justification as well, in the sense the way the run-up has really been. You want the fundamentals to really play that part as well. So, Nirmal, that's exactly the point, isn't it? When we talk about the way the market run-up has really played out, the way the markets are going into this budget. I remember in July or so, when we spoke, everyone was saying the Fed budget is going to be the more critical one, that's going to be the crucial one itself. So how important is this, especially in the backdrop of the way the markets have been panning out and the recent run-up that we've seen?
There's no doubt that this budget is very important, and expectations are also running very high. But one key difference that I notice is, after a long time, we are seeing circumstances which are like dream circumstances for a finance minister. Because we have seen budgets being presented by coalition government, budget being presented in an environment of oil prices being high, so you have tremendous pressure of fiscal and current account deficit, high inflation, so all kind of problems. So the first time in many years we are seeing that finance minister has a situation which is absolutely perfect for presenting a good reform-oriented budget. It's got a political party where the mandate has been on the development and growth agenda, where complete alignment in terms of with the Prime Minister, with the entire government, as well as oil prices is almost $65–70 billion bounty, which was unexpected. So I think that even if expectations are running very high, I'll be an optimist, and I'll think probably they can be met, and there can be still some pleasant surprises in the budget. What happens is when you come out of dark tunnel, it's very difficult to really figure out how light will be. So there are still quite a few skeptics, and people still not very sure whether the budget can deliver everything. But I'm betting only on one thing, that in last so many years, maybe 10–20 years, we are seeing circumstances which are very positive for a very good budget.
On that note, let's take a very quick break. We'll continue this conversation in just a moment.
Presented by NSA, Investor Protection Fund Trust. Co-powered by LIC of India, Zindagi ke saath bhi, Zindagi ke baad bhi. Partners.
In an environment where there is minimal social security net, it is the responsibility of every individual to plan for his or her golden years. So how much do you need to save will depend on what kind of lifestyle you want post-retirement. If for example, you think that the equivalent of rupees 25,000 per month of today's value would give you a decent retired life, what you will actually need after 30 years is roughly 1.08 lakhs per month. The bottom line hence is to start early, save regularly and choose the assets judiciously.
Welcome back to this budget special. We've been in conversation with Hiren Ved, Saurabh Mukherjee and Nirmal Jain over the last few minutes discussing the expectations going into this mega event. Saurabh, let's talk about a couple of the themes here. We spoke about the way the broader expectations are panning out. Hiren was talking about the way the macros and the fiscal math also is going to be important to focus on. But let's talk about what themes is one really need to focus on. Which are those pockets of the market that where the expectations are really high and you want to see some announcements coming from this budget?
I think as Hiren is pointing out, I think there's a rebalancing that the government will try to pull off. On the one hand, I think they will say that social subsidies, social security linked subsidies, say items such as NREGA, Indira Awas Yojana, RSBY, they'll say we'll keep the outlay, we'll keep the benefits the same, but because we have rolled out Jan Dhan, the amount of money we'll spend on these will be lower, so there's a reduction in leakages, so to speak. Then they'll say add to that the oil subsidy related benefits, and hey, we've got some money for a capex surge. So there's two areas. One, I think there's a positive and a negative. The negative area where we're losing some sleep and we're having a bit of a concern is, hey, as the government dials back on the spend on subsidies, does that have a negative effect on the whole rural India story? So, names which have done very well over the last 4 or 5 years on the wealth effect that the subsidies created in rural India, the rise in land prices, positive real estate story in rural India, does that aspirational consumption story in rural India come under pressure? I think that's a big area that we're looking at carefully. On the positive side, on the capex items that the government will focus on, basis what the chief economic advisor has said, basis what the vice chairman of Niti Aayog has said, the 3 or 4 heads that we are focusing on, one is defense. Second is transmission distribution, which because of Mr. Modi's focus on the Jyoti Gram Yojana, I think will be a big area of spend. I'm pretty confident there'll be extra outlay on T&D. Third is affordable housing, sub 15 lakh housing. Will the government try to stimulate that through subsidies and through tax breaks for developers? And the fourth area is freight corridors, road building. There's plenty of talk that the whole PPP construct will be put to one side, and NHAI will actually say that, look, now it's all EPC, we will provide the money, you go forth and build. These are the 4 areas that I think there's plenty of investor keenness, and as I was saying, a lot of that is already baked into share prices, such as the big cement plays in L&T, some of the PSU banks. And my worry is whether too much has been baked in than can be delivered on 28th.
What do you think, Hiren?
Well, I mean, it's so customary that, capital goods stocks and railway stocks typically tend to do well ahead of the budget. But my own sense is that while some of these allocations will come through, I think growth is going to be back-ended. So I think investors will have to take into account the fact that there may be a few quarters of weak earnings before these allocation numbers on capex actually kickstart orders and revenues and profits. So I think the challenge is not whether this will happen. The challenge is the time it takes before it kicks off, and whether the investors have the patience to hold on, given the fact that the valuations are already risen in some of this. I think probably people should brace for a period of consolidation before the economy actually kicks up and some of these sectors start to deliver. I mean, I'm not a great votary of buying because of something is going to happen in the budget. Over the medium to long term, stock prices align with earnings, and if they don't, then somewhere down the line that that correction will set in, and the alignment will happen. So I think people just have to be mindful of that going into the budget.
Nirmal, when we talk about the way the expectations are actually panning out for this budget, let's talk about a couple of themes and what are you focusing on? Which are some of the key areas the market participants are keenly watching out for in terms of announcements when we talk about this budget?
So actually sector-specific themes, I'll rather wait for the budget. I agree with Saurabh or Hiren that you get into some of these mid-cap and small-cap stocks, they run up a lot, and then the actual materialization of those expectations take many years to come. So I would rather play the market with large-cap, maybe private sector banks, or a broader, the whole market like maybe IT, pharma, all the stocks. But sector-specific, who's going to benefit more, who's going to get more orders? I don't think I'll be in a hurry to do that. Let the budget come out, let the things start panning out, even if you get stock a little more expensive, but you're buying them for 3 to 5 year perspective. So in terms of themes, I would at this point in time stick to the broader market theme and not get into any micro or a small or a budget specific beneficiaries. Also the budget has a broader reforms, say very resolute steps towards GST and simplification of tax structure, certain benefits of, or certain rationalization as well as relaxations in tax rates or the benefit. I think there is a broader impact on the market. I'm quite bullish on the market even post budget, because I think that budget will have a lot, maybe a lot more on public expenditure, which is required to kickstart the economy, because private capex is still not coming forth. Private investment is still a little hesitant. Having the ROE has been quite depressed for the last so many years, and I think the government, the finance minister, everybody realizes this. So they'll do something extraordinary or something really strong here, and that will have a macro impact rather than, of course there'll be micro beneficiaries, but I won't comment on that at this point in time.
Right, gentlemen, just hold that thought. We're going to take a quick break right now, but when we come back, we continue our conversation in terms of the expectations on this budget and also some themes to focus on. Stay tuned.
Business isn't just about getting a B school degree. It's not about playing it safe. It's not about age or experience. Today, business is about packing new ideas, breaking rules, and reaching new destinations. Carlton Luggage, the new face of business.
Fly via Istanbul to more than 260 destinations around the world with Europe's best airline. Turkish Airlines. Widen your world.
Welcome back to this budget special. We're in conversation with Hiren Ved, Saurabh Mukherjee and Nirmal Jain. Nirmal, what is the worst case scenario on budget day if we don't see, any big bang announcements or the kind of sobs that we're expecting for industry? What is the worst kind of scenario that you'd imagine for markets, and do you see that as a more far-reaching impact or just a temporary phenomenon?
So, if supposing budget is highly populist or, is not at all, which is unlikely scenario, but still, so there'll be a broader impact on the market. I think markets can correct by 5 to 10%, and some of the stocks which are run up in expectations of specific things in budget, they may have an even deeper correction. But I still think that even if supposing budget doesn't live up to expectations, it's just about a week or a little more than that, and market will, after correcting again, be in the underlying trend will not change. It will remain bullish to my mind.
That's exactly the point. If you're talking about that little bit of disappointment coming in, Saurabh, and as you've been tempering down expectations as well, The point is, would that be a good entry point? Would that be a point where you would actually ask clients to actually come in, or you'd still not be comfortable with the way valuations would really play up then?
I think, for the last 2.5 years, I've said that the Indian market has structural reasons to be much higher than it is, and I continue to believe that over a year and a half, the Sensex should head towards 36,000. I think where as the cycle proceeds and as we see more of the government, as we see the RBI unveiling its monetary policy, where we are somewhat changing horses is, we were very bullish on cyclicals a year and a half ago, and 90% of our model portfolio was in cyclicals a year and a half ago. Even as recently as August, 80% of our portfolio was in cyclicals. Last week we dialed it down to 70% in cyclicals. So as more and more of the recovery, more and more of the optimism, both around monetary policy, around Mr. Modi's economic management, gets baked into stock prices, we are becoming that much more circumspect on some of the names that have benefited enormously in this rally. So the bellwether cyclicals have already benefited enormously, and I think, if there's one adage which has worked for me in stock market, which is be fearful when others are greedy. So I don't dispute that the Sensex has healthy upside in it. Typically, for the first 3 years post a decisive election result, both the economy and the Sensex have moved up. I think we're safely within that zone. The question, I think, is more around the identity of how do you play the rally, and I think perhaps on cyclicals, and especially the bellwether cyclicals, some people are getting a little too excited.
Fair enough there. By when do you actually see earnings growth catching up, Hiren, or growth really being back at a comfortable level, in the markets?
I think the issue that we are finding when talking to companies is that it's the revenue growth which is the problem, right? I think the volume growth is not kicking in. Partly it's because there is pricing pressure because of fall in commodity prices, right? Typically in an inflationary environment, companies get away with price hikes, and the price hikes are not exactly to the extent of the increase in cost, but there's a little more. In a deflationary environment, it's very tough, and especially when capacity utilization is low, it's very tough to get top line moving. So while there is some benefits on the bottom line, because some of the cost improvements have not yet flown through, so I think that might cushion the PAT levels to some level. But really, for me, the key metric to look for is volume growth and top line growth. I think if you see evidence of that coming back, then I think that you are on a firm recovery path.
Nirmal, this budget, again, you're watching for a lot of cues in terms of the way infrastructure, in terms of the way spending could really play out, because these are some of the key factors that, again, can address a bit of the concerns that Hiren and Saurabh are talking about. Just your thoughts in that sense. How are you watching out for some of the announcements in regard to infrastructure and also the on-ground situation?
No, so I think it's a cycle, and most of the investors, institutional investors, probably understand that it's not going to happen in 1 month, 2 months, or 1 quarter or 2 quarters. It will take a little longer, and obviously different sectors will have a different time to turn around. You may see a faster action, say in auto or even cement for that matter. But at the same time, see, if you look at even 2001, 2002, 2003, when there was a turnaround, in 1 year, in fact, the BSE 500 companies' earnings went up by almost 100% plus. So what will happen is, there can be some disappointment, some expectations not met in the short run, but investors who want to buy from a longer term perspective probably will look through that and, still take the bet. That is one. Secondly, the demand growth is always, there's a cascading impact. So it starts with, supposing you put a lot of money through, capex in the public sector, and so that generates new investment demand, new demand for steel, cement, and that generates demand for, it basically lifts the overall demand, because obviously that money keeps flowing from one sector to another. So you have more labor, more demand for certain items, and which leads to demand for consumption also. So I think, of course, we are seeing a time, last few years, investment or gross capital formation has come to almost a standstill, and it has to turn around. It won't turn around overnight. But most of the investors are aware of that, so there can be some disappointments or some expectations which are not met by maybe results. But on the whole, I would say that investors, I mean, at least whatever I know and whatever whoever I interact with, they are looking at turnaround in 4 to 6 quarters and not in 1 or 2 quarters.
You know, Saurabh, it's a lot for the government to try and solve all these problems in one go and on one day. Yeah. But if you wanted to hear 2 or 3 things, or even just 1 or 2 things, like priority-wise, from them in order to maintain your view going ahead, what would they be?
I think it would be great to have confidence in the fiscal consolidation story. I think Hiren rightly began with that. My hunch is they will reiterate 3.6, just like they reiterated 4.1. 4.1% as the target on 10 July. My hunch is they'll reiterate 3.6, and people like me will look at the mathematics behind that. So the tax revenue growth assumptions, which were in the high teens on the 10 July budget, if they're once again in the high teens, then people like me will sort of sit back and say, hey, this looks to be the usual sort of fantasy mathematics that Indian budgets are typically characterized by. So I think the fiscal mathematics sticking to the 3.6 in a credible fashion, I think will be a very big plus for me. Second area would be if they're able to give a credible timeline on privatization. I think one of the big areas where I think there's a big disconnect between what a lot of investors, the FIIs, I think as Nirmal was referring to them, expect, and what I think the government is about is I think privatization is nowhere on the government's agenda from what I can see. If it is, it'll be great to hear about it, and if that's baked into the fiscal mathematics for next year, then so much the better. And area number 3, I think the area where I lose the most amount of sleep for is the banking system. So, fix on the banking system, a credible solution for the banking system's challenges around capital adequacy, a credible commitment to privatization, and credible fiscal mathematics. If I see those 3, honestly, I'll be far happier than the pump priming aspect, which I think is what the market is focusing on.
Just a quick takeaway there, then, Hiren. The point here is that's the classic debate that we've been witnessing on our channel as well, is who's going to really kickstart the investment cycle. The government seems to be pointing fingers saying that the private guys really started, but we've all been waiting because we know the size that the public sector spending really comes in at. So how does that really play out, and what are your expectations in that?
I think that the government should just focus on the fundamentals, the fiscal consolidation, the quality of fiscal consolidation. I hope they have reasonable assumptions for revenue growth and capital expenditure. They may do a little bit of hand-holding for a few sectors that might require some help. But I think that the capex cycle will kickstart on its own if the government focuses on the fundamentals. Because I think if there is credibility to the fiscal deficit number, you will see the RBI responding by cutting rates. Exactly. And once that happens, automatically things will be set in motion. So, frankly speaking, I believe that we should all grow up. Every time there is a budget, somebody cries and says, I want this, I want that. I think just let them do their job, which is that have credibility to the numbers, put in place I think there's a lot of work that needs to be done outside the budget. I think we've had so many ordinances which have been passed, right? We will have to see how those ordinances, become law. Invite more foreign direct investment, and I think that is the way to break this investment cycle logjam. I think we will have to work much harder in bringing in foreign capital, new sources of capital, until we can fix the bank problem. Unless this government is willing to slaughter some of its holy cows, like saying, why should we own 51% of the banks? I would be very happy if they said, we'll own only 33% of PSU banks. Wow. Then that's something which is radical. Or why should they want to keep subsidizing Air India? Yeah. What role is he playing? Is it very strategic? I mean, you maybe start with the loss-making PSUs and say we'll privatize them, right? Somewhere you will have to re-energize investors to say, okay, now there is something which is very substantial on the table for me to come in and put money. Otherwise, I think, we'll keep looking at the same old areas where the action is happening in other areas.
All right, gentlemen, we'll leave it there. Thank you so much for joining us today on this budget special. Thanks so much for watching.
Thank you.